PayPal's stock recently hit a 6-year low at $53.94 per share, but the anticipation of a substantial threefold increase in projected EPS to $4.95 for the next year makes it an appealing prospect. Despite this growth potential, the stock price hasn't reflected this positive outlook, which raises questions about market dynamics and competition from rivals like Stripe and Adyen. However, it's essential to emphasize PayPal's strength, particularly its massive user base, which exceeds 431 million. This vast user network is a significant asset, ensuring a continuous stream of revenue for the company. In comparison, PayPal's main competitors, Block, has 44 million active users, and Adyen serves a relatively small number of businesses and consumers with 10,000 businesses and 40,000 consumers. With a modest PE, price-to-earnings ratio of 9, and the potential for a substantial increase in its valuation, investing in PayPal is a prudent choice. The company consistently generates significant cash flows year after year, indicating its financial stability and growth prospects. So, even though PayPal's stock has faced a recent dip, it remains a compelling investment opportunity. Additionally, considering its massive user base and market presence, PayPal might even become an acquisition target in the future. The current low stock price doesn't necessarily reflect the company's true value and potential for future growth. Even in the face of these competitors, PayPal remains a behemoth, poised to achieve an EPS of $5.60 next year. While some may view it as a mature company with limited growth prospects, its trump card is the massive database it commands, boasting over 431 million active users. In an era where data is as precious as gold, this scale sets PayPal apart. Examining the numbers, PayPal's PE ratio of 9 compared to the sector's average of 15 stands out. It seems that the current market sentiment undervalues PayPal, potentially overlooking its vast user base and untapped potential. Even at this seemingly modest multiple, PayPal becomes an appealing acquisition target. At 8 times earnings, the valuation prices PayPal at $44.80, a figure that may seem conservative considering its strategic advantage. Even matured companies and competitors like Fiserv maintain an average PE of 15. When considering historical premiums for financial companies, typically ranging from 26–30%, a potential selling price of $56.50, $58.24 comes to light. This could signify a point of equilibrium where PayPal's genuine worth might finally be acknowledged. In essence, beyond the market's fluctuations and price tags, PayPal's story is one of adaptability and latent potential. As it navigates through the competitive landscape, the company's colossal user base could prove to be its ace in the hole, making it an alluring candidate for strategic acquisitions and partnerships in the continually evolving financial realm. Investing in PayPal isn't without its challenges. The fintech sector is fiercely competitive, with players constantly vying for dominance. Regulatory hurdles and the ever-present threat of cybersecurity breaches loom, adding to the complexities. PayPal's reliance on technological infrastructure and susceptibility to economic downturns create layers of vulnerability. Moreover, the company is influenced by currency exchange rate fluctuations and is heavily dependent on partnerships. While PayPal's global presence and colossal user base open doors to opportunities, astute investors must navigate these potential pitfalls and stay attuned to the ever-changing market dynamics for a well-informed investment strategy. Currently valued at just 9 times next year's projected EPS, PayPal seems to be a hidden gem. Even without flashy, attention-grabbing prospects, the company is positioned to offer substantial returns. It appears that the prevailing market sentiment undervalues PayPal, casting a shadow on its massive user base and the latent potential it holds. In essence, beyond the short-lived market shifts and numerical valuations, PayPal's story is one of adaptability and untapped possibilities. As it maneuvers through the competitive landscape, the sheer size of its user base emerges as a strategic advantage, a winning card that positions PayPal as an enticing candidate for strategic acquisitions and partnerships in the ever-evolving financial realm.